the gains that we've seen, you just mentioned the record gains that we've seen, some of the longest multi-month rise in gold prices in many years, came off a very strong July. We continue to set new records. It is still possible because we're in this sort of perfect storm for gold of heightened uncertainty, low rates, and a global health pandemic.
What exactly is driving it? Is it institutional investors? Is it the sophisticated investors? Is it hedge funds? Is it retail investors going out there and buying physical gold? What exactly is the primary driving force behind the move higher?
That's the interesting part, and it's part of why gold has risen so much, is it's basically all of the above. We're seeing investors of all stripes participate in exchange-traded product markets. Some of the large platform funds, some pension funds are also doing a lot of OTC and physical gold. But what is really important to understand is that this appetite for gold is very widespread. Investors, no matter sort of what perspective they're coming from, are looking at the market. They're appreciating the uncertainty. Even though we're getting record performance in a lot of public markets, what we are seeing is, investors do appreciate the type of uncertainty that's really proliferating right now. They are looking at low rates. They do see a weaker dollar. All of these things are coming together against the backdrop of a pandemic and, the easiest monetary policy that we've seen in a very long time. If ever. And that's really adding up to positive gold prices. And we're seeing investors' appreciation for gold really change. So it's not just the environment that's gold positive, but we have seen a measured change in how investors have thought about gold specifically.
Is there, in previous years of talking gold and gold prices with analysts and investors, one thing that often comes up is this idea that gold buyers, precious metal buyers, are typically stickier, right? They tend to kind of buy it and hold it longer because that's just a mentality that you have. Is it fair to say that it's the same this time around, or are we getting more high-frequency, shorter-term traffickers just looking to make a buck in gold?
We definitely are seeing some participation in the gold market really for the short-term price appreciation. However, the reasoning behind a lot of the gold purchases that are happening right now really does lend itself to this type of sticky investor behavior. That's not to say that it can't unwind at some point when the environment becomes a little bit more certain and economic performance is a little bit more even. But what we're seeing right now is definitely a pretty sticky investor environment for gold. People are buying it because they want to hold on to it.
All right, and just really quickly before we let you leave, is there a target price you have for gold in the next 12 to 18 months?
Yeah, so we actually revised our price forecast this morning. Our base case does have gold prices passing $2,000 per ounce in the next couple quarters. However, our high scenario, slightly lower probability, actually sees 3,000. And the way we get there is if things get a lot worse.